SPDas, the trading floor is yours.
Okay, thank you. Thank you once again, Igor, and good morning and welcome back to the New York session. It is about 6 minutes past uh, 9:30 a.m. Eastern, and let's get started off. It's no major price action today except what we saw in gold, where prices really rallied. So let's start from gold. Uh, it is now or I mean, in gold, it is either now or we are in for a minor wave five push through the 3100 zone. All right, now that the daily chart is flashing in the to your screens here, we've got minor waves, minor degree waves one, two, and three in place. It is quite a bit possible that minor wave four was terminated and the metal is actually pushing higher through the fifth wave. All right, but we are a bit skeptical because second wave was quite sharp. It was a five. It was a combination. I mean, five triangle wave B and C. So it was it was a simple corrective wave. All right. Normally, when are wave twos are sharp or simple, the alternate occurs during the fourth waves, and the alternate is it could be an expanded flat. That's the only option left. It cannot be a triangle here. Or if it is an expanded flat, that's what we are still counting. But there has to be some logical reasoning and thinking behind how long and how far the expanded flat structure can go. All right, and that price action was determined by 38.2 Fibonacci extension of wave A. Sorry, let me go on a 4 hour time frame. Before we do that, a correlation between wave 3 and wave 4 is that it normally terminates or normally oscillates or converges to a Fibonacci 38.2%. If not the 38.2%, 14% or 22%, but ideally it's 38.2%. Second, the fourth wave would come and test the Elliott channel as well before before turning higher again. So these two prices are, if we look at the convergence of the Elliott channel and the Fibonacci ratios, 38.2%, they are coming somewhere, they're converging somewhere around March 2nd or 3rd week now, as a couple of weeks have passed. So it is quite possible we, if the reversal has to come, it will come here around the current price action, and it will be quite swift. But we've been sending aggressive trades. In fact, we are actually flat in this discussion right now. But aggressive trades have been taken through the portal. But as far as the price action is concerned, we are still, yeah, that is what I was wanting to show. That the Fibonacci 38.2% extension of wave A was seen around 85. Prices have just about managed to penetrate a 15 points, and that's okay on a daily basis. And the other thing is that the extension of wave A of the minute wave B is also around 828, 87, 90. So if that is to be taken seriously, then prices should turn around lower from here itself. All right. can take that away, the Elliott resistance. All right. So now what is being done on the 4 hour, sorry, 4 hour we got a divergence. That's the only strong point, or that's the only point which kind of enables us to take aggressive calls. But it's still aggressive. I mean, that it is what it is. Okay. The price action confirmation would come when we see a break below 2850 minimum, ideally below 2830. So now, interesting fact is if we go on an hourly chart, again there is a diverging scenario, but the only fact is prices are not giving in. And if you look at the candlestick pattern, it is still not very clear as to a confirmed sell signal on an hourly chart. It is a shooting star. It's a neat little shooting star, but shooting star needs to be followed up by an engulfing bull, engulfing bear. Ideally, it should be an evening star actually. So there is no confirmed pattern which would enable us with absolute clarity, or maybe 90% probability with a tight stop about 10 uh, to go and initiate short positions. Now, I sometimes, I normally don't do that, but I sometimes go on an extreme smaller time frame, like a minute or so. And I just did that a while back when prices were trading around 29.10. What was seen was a quick impulse drop from 29.10 to 29.96 or so. Now, if that impulse drop is correctly identified, that with the wave 4 sideways and a three-wave corrective rally also taking place right now as we speak, then you got to you got to watch this happen in the next few hours. It's a 61.8% touch, and if prices continue reversing, if they kind of reverse from here, and like it goes straight to the extension that we are pointing right now, okay. If it drops lower to 28.72, it could be the third wave, and then at least 28.72 would give us an indication that okay, a five-wave rally, a five-wave decline, sorry, is underway against 29.10. And you know what? Once it begins to cut loose on the south side, then we can actually draw a path as well, as we normally like to do, like in wave three, and then wave four, maybe a bit sideways, and uh, and then wave five lower again, taking out the 2350 zone. So we need to see this price action being confirmed before before committing ourselves on the short side with some kind of conviction. All right. Right now, the shorts are aggressive in the sense that okay, you have a wave five completing around 29.10 of a lower degree, and then you have a bearish divergence. Now, this bearish divergence is not only on the hourly chart; it is seen on the 15 minutes, hourly, 4 hourly, all different time frames. So that's the only criteria to go and short aggressive. But with respect to price action, and most traders would want to see price action confirmation, that is normally followed after the RSI divergence that we are seeing right now. So next few hours, I mean, when we are back in the Tokyo Sydney overlap, I think it would be good to see how the price action has behaved. All right, but aggressive traders might want to position themselves right now because I've sold again around the 2905 in the portal. So it's going to be an interesting contest between the Bulls and Bears the next 1 hour or so. If the Bears are winning, then we are going to see a beautiful evening star maybe in this hour or the next hour. All right. So keep this in mind, please. Okay, I just removed incidentally all the curves, all the counts here, but it just takes a moment. Uh, the, we are either on the verge of beginning minute wave C within minor wave 4, which could bring prices lower all the way towards 2500, or prices are already on their way to terminate wave 5 at a minor degree, which is actually pointing towards much higher levels. 3000, 3100. I mean, I can show you the figures right away. That is actually wave 3, sorry. So in that case, that this would be wave 4 termination. So I have not taken towards 2500. And you can see the extensions are up there, 3300 that says. All right. It will be clear in the next few hours what gold is wanting to do, because it's going to do when it wants to do, right? When it's not going to fall when we want it to fall. It's a matter of time, but it's taking its own time, and we've got to be patiently watching how the price action is behaving in the next few hours or so. All right, so that's it is a high probable trade, but it is potential right now, and we don't want to simply go and commit unless we are inclined to raise an aggressive, a super aggressive trade setup. All right. Okay, so let's go to Euro USD. All right. Now, if you look at the price action, it's actually done nothing over the last 24 to 36 hours. I remember Friday NY session where where we were around the bottom and beginning to cut loose on the north side starting Monday, that is today. But we've got Tokyo Sydney overlap gone, and then we've got the London session gone, and now we are in the New York session. It is still not clear if you've got a lower degree wave 1 and 2. So it is the same wave story. It's carving waves 1s and 2s at different degrees. At least 2 can be seen on the hourly chart right now. We've got wave 1 and wave 2. Again, we've got wave 1 and wave 2 with the potential zigzag complete. All right. And as you can see, prices are still testing the backside of the Elliott channel. We need to see prices pushing into the buy zone again, and a push through the channel on right there. I would give you an indication of the price action actually. It needs to clear 1.038485 to clear the channel resistance. Once it does that, it's expected to go and shoot out like a rocket, right? But we are facing channel resistance support, and resistance is it's oscillating between the two right now. So let's give it a time, give it some more time to revive itself and break out of the channel. It's tell you what, if what we have identified is correct, that is, it is forming waves ones and twos of at different degrees. That's what we've identified, and if it is correctly done, believe it or not, this is worth waiting. Okay, this time which we are waiting is going to be worth waiting. because another 400 points would be covered in a flash. Or maybe it's waiting for some kind of a trigger if it is there lined up in this week or no, but a trigger there or not, price action and the wave theory is confirming that the euro gold should be back into action anytime soon now. All right. Okay, let's move to the dollar index. Okay, I typed a W. So no change in the dollar index as well. It's the third session for the day, and we're still hovering around the same price level that we started in the Tokyo Sydney overlap, around about 108 or 1020 if I remember correctly. So it's going to take some time before it cut loose. It cuts loose on the south side again. And if you allow me to do the channel, okay, it's testing the channel on the back side of the channel, but it needs to break below that channel support. There are 107.58 right now as we speak. All right, so a break below 108.50. Okay, trading point of view, I just forgot for those who are tuning in fresh. Trading point of view, there is absolutely still a good opportunity to initiate longs. The potential long entries can be still taken, and it is still within the optimal vicinity or optimum vicinity of where the price action should go and bottom. We were expecting around 1.03 over the weekend. Friday was 1.0283, and we are still just about 20-30 points higher from the best price. All right, so trading point of view, potential longs can be taken even now with a stop around 1.02 and a targeting around 1.0750. Going forward, back to the dollar index. Once again, we need to see to continue from where we left a moment back. We need to see a break below 107.58 for bears to really come back in control very strongly. All right, the wave theory suggests we've got waves ones and twos and ones and twos being carved at least two different degrees. So we're just waiting for that breakout to happen on the south side. All right. Now, trading point of view, I think in the Tokyo Sydney overlap, it was around the same price, and we were talking that it's good to sell or good to keep selling even if it goes or pushes through 108.40 or 108.50. I mean, 61.8% Fibonacci retracement is always good to keep an eye on that. We are still around the 38.2%. And if it pushes through 108.85, just in case, you got to go and sell there. A potential sell is would be triggered further if prices manage to reach there. All right. So going forward, we're still waiting for that breakout to come, but potential short entries between 108.20 and 108.60 still on cards. The stop around 109.85 and targeting 105. Potential targets around 105 going forward. All right, gold, we've just gone through the entire setup. Uh, for those who have just joined, I will take a moment to review. Gold is gold is either topping out right now or it's going to go and extend further within the minor wave 5. We are not suggesting a price action confirmation trade right now. It's only aggressive trades that we've taken to the portal, but it's not being suggested here. We need to see a clear break below the 28.53 or 28.50 mark before we can actually confirm a trade here in the live session. All right. But tell you what, bearish divergences are seen on the 4 hour time frame, on the hourly chart, and also on the 15 minutes time frame. All right. So multiple time frames are indicating a bearish divergence. It is also that's enough strong evidence or indication that they should be coming back in control. But the only thing is we need to see that happen. All right. Okay. GBP USD now. There you are. So it's no change as far as the price action is concerned or the wave counts are concerned. Let me bring it up again. It is let's do the counts again with the minute degree impulse and the corrective waves respectively. Okay, I need to change it to minute. And what we see on the right hand side is a corrective decline. Now, whether it's going to carve an expanded flat, we've got to just be a bit careful. I don't want to be stopped out unnecessarily. I'm going to readjust the stop loss just in a moment, please. It is good to believe that what we've done is correct. That we've got five up and then followed by three down, and once again a rally, an impulse wave, possibly being corrected lower again. So it's a series of waves, ones and twos, correct? But an alternate count could be we've got that impulse wave and then we're still finding the corrective wave 2, which is shaping or taking shape of an expanded flat. Remember, an expanded flat is a structure where wave B rallies and prints above wave A and then comes back sharp to test that wave C low or prints a low below that. All right, so we've got to just be a bit careful and stay away from the noise just in case bears are back. So I suggest to move a stop loss around from 2250 to 1.2 or 1.21. I think that's round about the low. All right, so please adjust your stop loss for now. And trading point of view, potential long entries can be still taken around the same price, 2380. It can go and add it further towards 2250 if it goes and prints there, because that's again the 61.8% touch. All right, and the take profits are pointing towards 1.29, 1.28, 1.03. So you've got that 1.28 mark, and then you've got that 1.32, the 3050 and 3200. All right. So keep an eye on on a little more bearish stance in pounds, so kindly be watchful and then begin cutting loose on the north side from there on. All right, so that's the story in pound. We can. I don't have a recommendation for now for Bitcoin, but each session I just wanted to bring up a humble warning for those who are long. Got to just be a bit more watchful because price action is stalling and it's stalling and moving sideways and overlapping, and all these things are properties of corrective waves, not impulse waves. So that means the rally which is happening here, they're all a part of a corrective wave, and maybe we could see a push lower. We are not aggressively pushing a short entry, but just in case if it breaks below the 89 mark or even 91 mark, then we've got to be a bit realistic in understanding the fact that there could be an impulse of one higher degree in place. All right, and we got to refrain from buying thereafter. All right, but just in case if you're holding long positions and you still want to continue doing so, please have your stops tightly well below the 91K, all right, 91,000 mark. So the indices we will come back with more price action. We're just seeing. I was watching Nasdaq, and I can bring that up quickly. Nasdaq index, the daily chart. If you look at the drop here, I'm talking about 17th December onwards through 20th December. So it's Nasdaq could be the first one who might have just started this decline, but there has not been any high after that. 17th December 2024. So if that is a five-wave drop, which it is a five-wave decline, and then you have a series of three waves. So that is a three up, which is wave A, three down, wave B, again three up, wave C, three down, wave D, and three up, wave E. It is quite possible that the entire 1.5 months has gone into carving an, an expanded triangle. And if that is correctly done, if it is wave E terminated around the 21,865, the prices would stay below 21,865. Not only stay below, but it will now start carving five waves lower from this point. All right, so it could be the first one. Nasdaq could be the leading indice on the south side, uh, and Dow and SPX would follow. But all these are still uh, potential probable wave counts that we are discussing. The moment we have more concrete price evidence, then we would I would go ahead and do a special session on the indices actually, and we go forward with that again. All right. So at this point in time, we would bring this current session to a pause, and once again, thank you for tuning in. And I'll be handing it over to Igor. I'll be back again after a few hours to touch base with the Tokyo Sydney overlap. Thank you. Back to you, Igor.
SPDas, it's always a pleasure. Thank you so much. Really appreciate it.
Yeah, thank you.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com. Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com. Forex Lens.